Good afternoon. Today is Wednesday, May the 17th. The time right now in Singapore is 1:02 in the afternoon. Now let's do a bit of recap what the Wall Street has been doing overnight. We can see that last night we have the release of the U.S. retail sales number. It was less than expected. Market was expecting an improvement of 0.7% over March, but it only came in 0.4. So it was definitely not a good number. And also on top of that, we have a revision downwards in the March number for retail sales. So as far as retail sales is concerned, it is contracting. Okay, so that is the negative. However, industrial production has actually bumped up a little bit. So that more or less cancel out the negative implication of the retail sales. But by and large, you can see the Dow Jones continuing to slide. Okay, now market is very, very close to the month low so far at 32,937.5. Okay, whether it will break remains to be seen. I think the odds are good that it will maybe marginally break this level. At the most, the market may actually decay all the way down to 32,450 points, and that could be a better place to actually consider buying again. Okay, but for the time being, I think we have a bit of a mixed performance among all the major US equity index. The Dow Jones is weak, obviously, but when you look at the S&P 500, it does not appear to be that weak. You can see that the market did not fall. Okay, the market is basically holding on to last week's low, and we can see that the market, if it can go down a little bit more to test the 4,090 to 4,100 levels, I think that would be a perfect level to actually engage the market on the long side, because I get a sense that the market wants to go higher, and if so, the immediate obvious target will be the month high at 4,186, or even the February high at 4,195. So both these levels could actually act as a immediate barrier to higher prices in the event that it can actually punch through. The market could be gunning for 4,240 to 4,340 levels. So upside looks good for the S&P 500. Obviously, the one that has been the most bullish is the Nasdaq 100. Yesterday, we have another marginal high for the year at 13,498.4. So again, we can see that the market right now is getting very, very close to the last August high at 13,721. Will it take it up? I think it will take it up, and I think the market could be gunning for somewhere around somewhere in between 14,135 to 14,712 levels. So do watch out for this possibility. I think that upside potential for Nasdaq remains very, very evident, as you can see in the chart here. So we got a mixed bag here. We have weakness in the Dow, very firm market in both the S&P 500, especially in the Nasdaq 100. So this is a mixed feeling. Now we can look at Asia market. You can see that the Hang Seng, after rallying to a high of 20,183 yesterday, now this morning has beginning to lose steam. But by and large, you can see that the market here is actually trading sideways within very, very well-defined barriers. The lower support lies in somewhere around 19,500. The upper limits is probably around 20,300. Okay, so you can see this well-defined range. The market has to break out of either of these barriers in order to have new development. So in the meantime, is watch. Do not do anything on the Hang Seng. Now, the one that is obviously charging higher is the Nikkei 225. Now, this morning we have the release of Japan Q1 GDP. On an annualized basis, it is a marvelous number. The market was only expecting an increment of 0.7%. It came in 1.6%. So it's double that amount and then more. So you can see that the Nikkei has actually have a surprise upside, this morning, because this GDP numbers was actually a lot better than market expected. Even on a quarter-on-quarter basis, it was also very, very good. Market was expecting somewhere around 0.1%. Okay, it came in 0.4%, so it's three times better than what the market expected, although it is hovering at the zero level. But when you look at the annualized number, that is the kicker here. Now the question here is whether can the market, based on this very good number, continue to surge. The fact that it only managed to go up less than 500 points is actually a sign that it does not have a lot of inherent strength in it. So we'll see what happens. If the market turns around from here levels on the back of very good news, then there is obviously a bad development. We will have to watch. Okay, here we cannot tell. Okay, in the mainland Chinese market, we can see it is mimicking what we are seeing in the Hang Seng. Market actually tested the April low, managed to go down marginally to 3,923 before it rebound back above 4,000. Now it is losing its grip at 4,000. Now it's back to 3,964. So again, by and large, it wants to go down. So we can see that the sentiment in the mainland Chinese equity markets is not that bright. Okay, over in energy market in the WTI, we can see that the prices rebound back to $71.74 overnight and beginning to lose ground. There is a possibility the market may extend a little bit lower, ideally into $67.50 to $68.75 thereabout. And if that's the case, then buying will be an option here. Okay, because when we look at the chart from this perspective here, we have a very strong rally from the year low at $63.73, and this pullback from $73.83 can be seen as a technical pullback, and the market is probably going to gather some steam to challenge the month high at $76.07 and possibly even higher to test the last month high at $83.49. So upside potential is huge here. Okay, over in the gold market, we can see the gold actually have a continued decline overnight to as low as 1,985.5, and if market can somehow rebound to $2,004 to $2,008, I think that will be the last level to sell, because if you have not already sold, this market become very dangerous to sell as the market continue to trade lower and lower, because my target is probably going to be around 1,947 to 1,966. So very risky, because the time wise we are getting very close to the X date. Okay, so X date, most people think it's going to be June the 1st, in which the US will run out of money. Okay, and if they actually ends up in a default, we're going to see a spectacular explosion in precious metal prices, meaning the market is going to see a very, very large surge in prices. So if you have already sold, well and good, protect yourself. If you're not already sold, it's getting to be a little bit hairy to continue to sell as the market go lower. Okay, so be very, very careful on the background of this possible US default. Okay, over in the silver market, we saw the continued weakness into another low for the week at $23.64. Again, nothing to do here because it is already within the bracket of prices which I think is going to find buyers. Now this area is $23 to $23.73. Upside potential possibly around $24.18 to $24.50. So very little trading opportunity here. So if you can afford not to get involved in silver for time being, stay out of it. Okay, and if you have to get involved, stay on the long side. Over in the dollar, we have a kick up in the dollar overnight. From 102.04 went up to as high as 102.50 last night, and right now the trading just under 102.50, and it is within this bracket of prices that the market could be vulnerable. But based on the rally last night, there could be a situation in which the market may actually go beyond this range and challenge the 102.75, which is the April high. So let's watch if this is going to be the possible thing that it may happen. Now the question here is not that it will breach. The question is what happened after it breached. If the market goes up and couldn't sustain and come back down again in a reversal pattern, selling then is not selling then will still be a good trade. Okay, so this is what I'm trying to say here. Over in sterling, we can see that sterling actually has a pullback last night, but it was actually quite volatile. Market first went down to 124.65 before bouncing back to 125.47 and then come back down again. So it was pretty volatile in sterling last night. Now, if this market can somehow go back to 125.60 to 125.90 levels, that'll be a great level to position short. But where we are right now at 124.78, it may not look to be very likely. So market may actually go down first. Okay. Now the bottom side, I think the market key level will be the March low so far. The month low so far at 124.35. Okay. If the market goes below this level and close below 124.35, then market could actually gun all the way to 122.75. Okay. Over in the Aussie market, we saw a bit of volatility as well. Market rally up to 0.6710 before losing ground back to this morning low of 0.6445. Now this market right now is in this bracket of prices between 0.6626 to 0.6667, which I deem to be more suitable for buying rather than selling. And then top side target here will be 0.6730 to 0.6750. Now, overall, I want to hold short rather than hold long. So if this is going to be a bounce, look for some selling interest within this bracket of prices between 0.6330 to 0.6730 to 0.67.5. Okay. Euro dollar has very, very shallow rebound. So much so that I think the most you can do is a rebound back to 1.10. Okay, if that's no, sorry, not even that, 1.0915 to 1.0930. So very sure retracement. If you can get a retreat, a bounce back into this area of prices, that could be an area of selling opportunity with the immediate target at 1.0790. Okay. Dollar yen looks at one stage to be toppling over, but the market managed to rally back to 136.68 overnight. And based on this momentum, maybe there's a little bit more upside left. If the market can go back to 137.30 to 137.90, that could be a better place to actually look for selling signal. Regardless, if the market go down and breaks below this very dark support line here, then that could be signaling a top is in place and get ready to sell. And I think that will be my strategy going forward. I may put some order here to sell, but in the event the market fails to get to those level at 137.30 to 90, then maybe if the market breaks and close below the support line, I'll be selling into weakness rather than selling into strength. Okay, over in dollar Canadian also have a bit of a pullback yesterday, but we also saw a robust rebound from 134. Now market is at 134.80 thereabout. If the market can extend a little bit higher into 135.15 to 135.70, this will be a great area to actually position short for the possibility of a resumption of the fall from 136.67 all the way to challenge 132.75. Okay, so this will be a good game plan. Now over in Bitcoin, it does look like the market is getting ready to rally. Now the market dropped down to $25,800 on Saturday, and now we saw the rebound back to 27,666 overnight, and now is losing a little bit of steam. Now this pullback from 27,666 does look corrective in nature, and if it can extend a little bit lower, I've actually placed order to buy between 26,510 to 26,735. So this will be a great level to position buy, because if I'm going to be looking at this trade, the risk reward does look very attractive. If I want to be a little bit more aggressive, I could either put my stop below $25,800, or I'll do a little bit more. I put it below the March low at 24,000. Okay, the low in March was 23,940. So I could actually put my stop just below this level and exchange for the possibility of the market at the minimum to challenge 30,000. Okay, so this will be the immediate barrier, because there are 3 times the market has actually challenged, never quite did it, but the 4th time could be the lucky break. Okay, so if this is the case, I will probably take some profit at 30,000 and then watch how the market performs at 31,000. If the market can also surge past 31,000, then I know the market has a possibility of challenging this level here. Okay, you can see this very faint green horizontal line at 33,000. So this is my game plan going forward. I've actually placed some limit order to buy. Let's see whether it will be done. In the meantime, that's all I have for you. You take care, and I'll see you tomorrow. Bye-bye.